Happy Friday, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, August 1st, 2025. Ron Quaranta here with my amazing co-hosts, David Brill, and the original OG mother of blockchains. I'm raising the old OG phrases, Josh Klayman. Welcome, everyone. Thank you for joining us. Before we begin, our usual disclaimers. Obviously, keep in mind, nothing discussed is accounting, investment, legal or tax advice, and that, what we're discussing really are our own personal opinions and not necessarily the opinions of our individual firms. David, Josh, another busy week comes to a close, and it is the first of the month. I don't even know where to begin, David, and I know we talked about it in the green room, but I'm diving into the market stuff. We've gotten a lot of economic data. The crypto markets have had, let's call it an interesting week. David, you want to bring everyone up to speed on where we ended up?
So, I think that a lot of people thought that these numbers that we've been getting, in the market with relating to jobs and ISM, we would see, more positive numbers. But unfortunately, with the revisions, as we see under last year and now this year, we basically revised out of basically practically any new jobs the last couple of months. So I think the idea that we don't need to raise rates has sort of gone out the window again. And as a number of people have said, we probably should have lowered, rates at this last meeting, and we're going to be a little late again to the party. But I think hopefully in the September meeting that we do see a rate cut. So I think, as you can see, look, we've had a big rally both in the stock market and in crypto. So taking a pause isn't the worst thing. And one good thing is that we've seen a lot of positive earnings. Unfortunately, Coinbase didn't have great earnings, even though they're doing well as a company. So, they fell off about 15%. But we have to remember they've been up 2x since April. So I would just say we're taking a breather. And I think the market's taking a breather, but the crypto regulatory sphere has not taken a breather, and it's been full on this week.
It has been full on. And Josh, would definitely have to pull you into some of this before I give you an opportunity to say risk on or risk off. David, I want to push on some of those numbers a little bit because I texted you early this morning. Everyone in the audience knows the three of you guys are stuck hearing and seeing texts from me all hours of the days and night. This morning, David, the number and revisions were absolutely astounding. We added 73,000 jobs. We expected over 100K. The 2 months prior, David, the data was off by 250,000 jobs. And the reason we bring up this kind of macro picture isn't just for the sake of quote unquote TradFi in the equities markets, although that's all important. The spillover of that affects firms using crypto. It affects the price of crypto and how capital is allocated in that space. David, it's not the data, it's the revisions, but this is astounding to me.
They are really large. I have one view that may be a little bit controversial is that, as this administration's focused on just having, legal, citizens working and not having people with temporary status or who aren't here legally working. I noticed I did some reading that jobs for individuals who aren't in the U.S. legally were down 1.5 million since April. And then jobs for people who are citizens were up about 350,000. So maybe we are seeing some of the runoff of just our change in immigration policies, and maybe that has something to do with the change in the jobs.
Yep. Josh, did the Klayman family office call you this morning with the economic data and wondering what you wanted to do?
The Klayman family office did not, in fact, call me. But if they would have, I probably wouldn't have had time to take their call.
Fair enough.
They're not that big of players.
David, Josh, I think the one other thing I want to add to that, and Josh wanted your opinion on this as well. David, I'm with you on the jobs data and this kind of the runoff of immigration changes. I won't even say the word that begins with a T that we hear every hour or so, tariffs. I'll just say the word. But David, I wanted to talk about something that's monetary related, and I don't envy the Fed chair of the job. But when you look at the data and we talk about this stuff and how it impacts global markets, some of the data today told us job market maybe not particularly as strong as we would have seen. If you look at some of the indicators, it looks like inflation ticked up. I'm going to be honest with you, David. This will be my controversial take. I don't buy the inflation data Shout out to the Trueflation team. Shout out to Pompliano. I think Pompliano publishes on this frequently. I think inflation is much lower than our readings like the PCE, for example. Data, if that's true, how hard is it going to be, or easy to be, get interest rate cuts later in the year?
Well, it's a challenge. I'm with you that I think inflation has gone down.
Yeah.
But, there's this baseline 2% interest, 2% inflation that they're trying to get to before they consider rate cuts. And I just don't think we're going to get there. But I do think like real inflation, like the way you're thinking about it, it has gone down. I don't think you're seeing these, prices inflate in ways that people are talking about. I do think things are still expensive, but I don't think they've gotten more expensive. So I agree with you. And I think that, look, I think we're primed for a rate cut. And also we have these locked up mortgage markets.
Right.
People are not going to leave 2.5% mortgages to sell, even at a big profit, when they have to get a new mortgage at 6.5% or 7%. And so, prices have increased, but the cost of borrowing has increased, and it's made it sort of untenable for a lot of people to buy real estate.
Yeah. Josh, Adam, thanks. Shout out, Josh, David, thanks. Shout out to Adam Goldberg. It's not an understatement to say it may be the worst non-pandemic jobs report in 2 decades. Good point, Adam. And Dr. James, you don't buy the published data either. Thank you for at least making sure I'm not totally off base. David, Josh, in the context of all of this as well, and we'll probably come back to the market stuff, it's not been a boring week, Josh, in the world of legislative and regulatory in the United States. And I will share with you, we have a legal working group meeting coming up on Monday, Josh, that you chair. We worked on the agenda, me and the team, the past day or so, and the longest list on the agenda was all the stuff Josh Klayman has to talk about on Monday. Josh, the presidential report came out on digital assets. SEC Chair Atkins is calling it Project Crypto, or that might be the news. Forgive me, I haven't read them yet. Josh, what did you take away on this week coming out of DC?
I mean, I think we're seeing a surge of activity. And yes, in fact, Paul Atkins did use the term Project Crypto. Yep. And he said that he and Hester Peirce are referring to it that way, and that it is essentially a new North Star for the SEC in aiding the goal of the White House to make America the crypto capital of the world.
Yeah.
So, yeah, no, I mean, it's incredible. If you want, I can go into some of the things that we've seen this week.
Dive into it. Let's do it.
So, of course, we have that speech called American Leadership in the Digital Finance Revolution, which many are calling the most pro-crypto speech ever by an SEC chair. It really held nothing back in a lot of ways. And I think we're seeing, let me just draw a parallel for a second. Yeah. As you may know, just roughly a week prior, maybe 6 days prior, we saw the White House's AI report.
Mm-hmm.
Right? And so then this report swiftly followed. And as we know, President Trump appointed David O. Sachs as the first ever AI and crypto czar for the White House, kind of linking the fates or the trajectories of those two technologies. And there's a similarly ambitious vision and thread that runs through each. So I think in terms of the report itself, it gave key recommendations. Excuse me. I won't run through what they are, but obviously it dealt with a wide range of regulators, making it easier for American citizens and businesses to own digital assets, use blockchain technologies, and basically empowering those in the sector and across sectors to upgrade areas of our economy using these new blockchain technologies. And it goes into many recommendations for specific regulators, including the SEC, CFTC, FinCEN. It talks about banking regulators and says never again should we see a choke point 2.0 or something like that. It talks about dollar-backed stablecoins being the next wave of innovation in payments. And it urges policymakers to encourage their adoption. It talks about law enforcement and the tools that should be able to be used by them to hold those doing illegal activities accountable. It even goes into tax, right? It asks Treasury and IRS to publish guidance on a bunch of topics.
Yeah.
Now, another quick thing, if I may,
Go for it.
this is something that Atkins speech referred to as well. We saw last week the SEC's approval of or vote to approve an order permitting creation and redemption of in-kind crypto ETF. So, I mean, that is, I just said that in a really weird way. It didn't make sense.
But we understood you, and that's the scary part.
Went from my mind to my mouth, got a little garbled. But yeah, I mean, we're seeing something unprecedented here. And yeah, it just keeps going.
There's a lot to peel back there, Josh. Thanks so much. Now, David, I want to start on Josh's last point, if I could. The in-kind redemptions for crypto ETFs. This didn't come out of the blue, David. This has long been sought after, and I think it was BlackRock particularly that was pushing for this. For the audience, David, can we go into the details of why that's important versus what we've had for a long time since the advocacy of or invocation of crypto ETFs, which was for cash only? Why is in-kind important?
Well, I think in-kind is important because people, in these contracts, sometimes you want to actually hold underlying. And this can be for certain sophisticated players a more efficient way to obtain the underlying rather than constantly have to sell a position. So they may want to execute, parties may want to just actually receive the Bitcoin instead of having to cash out of their positions. Maybe you can talk to the mechanics of it a little more, Ron, if you want. But I think that is very important. And I think this is what people wanted originally when they filed for these ETPs and ETFs, that they could have the ability to do in kind, and it just wasn't something that the previous administration, and particularly, Gary Gensler, was in favor of. And I think what I think is really stark, and I took a few notes I want to share with the audience, is like how much we've moved and how much things have changed from this administration to the prior one, especially with the SEC. And I think one thing people forget is that even if we get legislation from Congress that's favorable to crypto, and a market structure bill, the SEC and the CFTC and other regulators still have to promulgate the rules of the road to enact this legislation. And so we really need an SEC that is engaged and a CFTC that's engaged and regulators who are engaged. And, we're getting all of those positive, vibes and positive actions, from the speech. And just a couple of things that I thought was really interesting. I think the one that I thought, there were a couple of things I thought were really important. One was, just hearing that the reaffirms SEC's focus on supportiveness and integrating crypto, fitting into the overall securities and crypto regime. Like Gary Gensler is always like, crypto just should be treated like every other asset. And clearly, I think the three of us never felt that way. I think clearly most of the people in our industry didn't feel that way. And here, an SEC chair say that really sort of reaffirms what a lot of us have thought. And why that's so important is think of all the efforts people have gone through to show that a crypto asset isn't a security, and that, being deemed a security was sort of almost a death knell for a crypto asset. So just to see this sea change and how dramatic it is really, really important. And I think I had one or two other things I wanted to share that, basically directing the staff to draft clear and concise rules for the rules of the road for crypto. I mean, just a total, 360. And the last thing I thought that was really interesting is that, believing in the right to self-custody, and that's an important facet for people. So I just, it's a dramatic sea change and one really needed for us to move forward.
David, I'm with you 100%. It's interesting to see how this has evolved, and the three of us have been watching this with so many of our colleagues and so many folks watching for years. I want to talk a little bit about the self-custody, though, and I think that's an important consideration. For a long time, particularly in the prior administration, and again, this is not a political comment, other than the fact that self-custody was really frowned upon. If it's going to be looked upon as an important feature of crypto markets and how it evolves in the United States, I would argue, David, the UX still needs to be improved. And I think it's important to raise that because we're having these conversations. Again, we're not lobbyists, but as we talk to legislators and regulators in DC, as we have conversations with members David, Josh, do you want to talk a little bit about that user experience? And there are hard, cold storage wallets, David, where I still have a hard time entering the password for cold storage wallets. And in my mind, that's one of the inhibitors. I know it's not part of our agenda. What needs to happen there, David, for that, or Josh, for that to evolve?
I want to give a great example for the both of you, and then Josh, I want you to weigh in too. Someone who has an estate is going through probate, reach out to our company to help assist them in getting seeing what was on the cold storage wallet,
Yep.
and having a accounting of it, and then at some point liquidating it. And all the people that I spoke to and they had spoken to, none of them even wanted to dare get involved in it.
Yep.
Because look at the risk if you're like probating somebody's estate. If you hit the wrong key or something, you could lose all the crypto. And this amount of crypto here we're in the tens of millions of dollars. And so, you shouldn't have to hire a third party to, go through and move crypto from a cold storage wallet and onto an exchange or an OTC desk and sell it. Like, we should evolve to the place where we don't need to do that because we're worried about, losing the crypto or even accessing it, or, not being able to access it by putting a wrong password in. So I'm totally with you. It's something that unfortunately has not evolved the way I would have liked to see, and it is definitely a detriment.
David, Josh, just so you're both aware, as a side digression to that, my wife has finally given up on accessing any cold storage that we have. She just has your cell phone numbers in case of my untimely demise. Just warning you both in advance. Josh, go ahead. You wanted to weigh in.
I was just going to say, some of the user experience challenges, I mean, up until now, or maybe not up until exactly now, but over time, sometimes those had served positive, functions in a way, right? Like,
Fair.
if you didn't have a certain level of technological adeptness, wow, my words are bad today, then you would stay away from it, right? And you would perhaps not use technologies that you don't know, or tools that you don't know how to use.
Yep.
I think as digital assets have become more and more mainstream, luckily, in connection with this new administration, we are seeing solutions and different third parties that can help bridge that gap. Now, it's not going to be the same as self-custody, right?
Yep.
And there's always that overlay of not your keys, not your crypto. But some people may never get there, right? Like, some people just may never get there. So if we want them to be able to engage with digital assets and, have the ability to receive upside or to use digital assets for specific purposes, then maybe we also need to be advancing infrastructure. And I think that's actually one of the arguments that had been made for a long time about what now is kind of old hat, which is the ETFs.
Right. Josh, David, good points. Dr. Gibson, by the way, agrees with everything David and Josh are saying. Dr. James, that's how I get through my day. I just agree with David and Josh, and it makes my life smoother. Josh, you open the Pandora's box of all of the stuff that's happened in DC, and I think there's a couple of important points there I'd like to raise with both of you. Full disclosure, Josh, you're aware we're working with some members to respond to Senator Lummis's proposed market structure commentary at the Senate Banking Committee. When we look at what SEC Chair Atkins has commented on, I've seen some interesting articles, and one of them, Josh said, and I quote, "ICOs are back," which is slightly disconcerting and slightly exciting at the same time. Josh, is that true? And what are the warnings or things we need to be worried about as ICOs move forward as an available tool in the United States market?
So I think, to the extent that ICOs may be returning, I think we need to bear in mind something that I think is very important from the SEC, right? And that is, while there has been a recognition that a lot of times there may not in fact be securities being sold or offered, right? Which we have tried to convinced them for a long time of that. And under Hester Peirce's crypto task force, we've seen this. But I think we have to remember that doesn't mean that just because we don't have necessarily someone policing disclosures in the same way that happened before, which obviously was overreach, we still need to be mindful that not everyone is a good actor, right? So that's a whole separate question. And I think making sure we demand disclosures is important. I think for those thinking about doing ICOs, I would just caution that the Howey test does still exist.
Yeah.
And it does still involve facts and circumstances. But I think there is an excitement with it, Ron.
I think there's opportunity there too. Again, I'm paraphrasing a little bit, but the three of us have often said fraud is fraud, or bad actors are bad actors, and there needs to be a level of warning associated with that. But David, what does this open up from the perspective of opportunities from an entrepreneurial perspective, or even in financial markets, for example, in the U.S.? What does this kind of open door of legitimate activity do for us?
One of the biggest things is we have the biggest pool of capital in the U.S. And for a time, there was just players in the U.S. who, if they didn't create an entity overseas in Cayman and BVI or something like that, they had a hard time, investing in crypto or being part of the ecosystem. Yeah. So I think, enabling regulated entities to get involved in the ecosystem and encouraging it is a big deal. And I think that a lot of banks and institutions, and I had a call with one of them a couple of days ago, said, you know what, we want to be a player in this. We don't want to be left behind. And one of the things he said to me in particular was, we don't want people leaving our institution to go to others just because we're not offering them crypto. And so I thought that was really interesting. But I think we really need to reimagine what a disclosure looks like in an offering for tokens. Because I think, candidly, there are some professionals who will read the S1s with IPOs. But I think if you really looked in the mirror and asked how many investment bank professionals actually read the S1s before they invest in something, I'd say it's really a de minimis amount. It doesn't mean that we don't need those disclosures and people don't need to be accountable, but we need to reimagine them in a way that is more accessible to people and is really relevant, especially in the crypto world.
Yeah. David, to that point, though, the example you and I have talked about many times in the past, and I know this is more irreverent than I mean it to be. There are retail investors trading options, for example, that get the 40 pages of OCC disclosures in 3-point font and never read it. So what are we talking about, Josh, when we talk about disclosures? How much evolution needs to happen in the markets for the U.S. to be able to make that workable?
I think it depends.
Right. I guess the question is, what do disclosures need to look like for everyday people? And I'm not sure I know the answer to that.
I think I've got to say, even assuming that there were a securities transaction there, right? Yeah. I think maybe we look back to what Hester Peirce had proposed in Harvard 2.0. Yeah. Right. I think some of those things, regardless of whether it's a security or not, those are really important points. And frankly, in practice, that's sometimes what I recommend. Yeah. Is that we say, okay, what are you contemplating doing for this launch of whatever? And let's tick through these items, because having information about the team, having instructions of how to look on chain for certain information, all the different components that Commissioner Peirce and others who, provided feedback so effectively set forth in this proposed token safe harbor. I think regardless of whether that is official guidance or not, it's helpful, it's reasonable. And I think one thing that comes to mind is, even if you're not dealing in a world of securities, you probably want to know, is this token that I bought, has 90% of it been pre-sold with no lockup at a discount, right? Yeah. These things we want to know.
Yeah, good point. Good point. Josh, David, thanks so much.
I totally agree. The tokenomics, if there is an ICO, that needs to be front and center, and it needs to be very explicit. I just think there's a world where we could take what an S1 is, and it could be really boiled down to really essential elements that for a token holder that might, be interested in buying a potential ICO. And maybe it's just like a 2 or 3 page executive summary of like main points, and then maybe there's more in the back so that people could read like the original summary. And then if you want more detail, you just link in that summary into more detail, whether it be on the founders, tokenomics, the industry, whatever it is. And so do it in such a way that it might be more digestible and again, still in plain English.
Josh, can we call it Baby S1?
I mean, we might not want to if we're saying these aren't securities. Right?
Fair point.
You might want to actually rebrand ICO, but I don't know if that's if there's any likelihood. But you know what? I do see a number of different types of entities, platforms, protocols, others, where they say, oh, I want to promote tokenization, right? And they say tokenization of equity or tokenization of, some sort of interest. And even on tokenization of equity, by the way, I know this is different from an ICO generally.
I know where you're going with this, but go ahead.
Yeah. But the question of whether, okay, if you do this, are you actually I feel like you have to probe with the person who's asking you a few things. One, are you talking about an ICO, right? Are you talking not about equity actually, but you actually want companies to be able to do ICOs using, your network or your platform or something like that? So that's one. Number two, if you really are talking about tokenizing equity, do you really mean tokenizing the actual equity, right? Or do you mean offering exposure through a derivative to the price action of the stock?
Yep.
So it's like 3 or more potential items, and people are talking about, oh, we're going to promote tokenization.
Tokenization, right. And there's this entire litany of things that can or cannot represent what is actually being tokenized. Josh, David, let's pause for a minute. Adam Goldberg reporting again, noting some of the report and Chair Atkins' most interesting comments were on vertical integration and trading of tokens on different registered and unregistered exchanges. He seems to be envisioning security and non-security tokens listed side by side, which is a very good point. It'll be interesting to see how that side-by-side evolution, David and Josh, develops. Dr. Gibson, they are making excellent points, substantiating my earlier comment, Doctor. That's why I just listened to David and Josh. David, let me ask you, you brought up some of the institutionals. When you got off the phone with Jamie Dimon, talking about JPM and Coinbase kind of working together, when I read that article, my head slightly exploded because I remember you and I having a conversation 9 years ago, I think, about what is JPMorgan's problem, and now they're pretty deeply into it. Is this the beginning of that wave, David, of institutional engagement we've been thinking about?
I don't think it's the beginning, but it's really like a very important step in the process. And I do want to give PNC Bank credit because they had an announcement with Coinbase first. But I really think there's a couple of really important things that haven't been touched on. A number of us in the past have had issues with our bank accounts if we were buying crypto. And so now that a JPMorgan is allowing their customers to sort of an easier on-ramp to Coinbase, I think that issue will go away, for bank account holders in the US who want to buy crypto. Because imagine if I always tell people you should have 2 bank accounts because you just never know. People's accounts have been frozen in our industry for no discernible reason. And as you know, Josh knows, I think Ron, if you're flagged for a BSA AML issue, the bank or the institution cannot tell you that. If they file a suspicious activity report on an individual, they can't tell the individual that. So you have this black hole of information, then suddenly you can't access your bank. So I digressed a little bit, but I think that's a big point. I think we've reached a tipping point where I think that the banks realize that there are so many new crypto customers coming into the ecosystem that they need to be aligned or should be aligned with some of them to work with them, because a lot of those crypto customers may look at it and say, oh, which banks are going to make it easier for me to buy crypto? And maybe in reverse, then look at those banks as maybe that's where I want to have a bank account. So it's an ironic flipping here that we're seeing. But I do think it's very important because, in the past, Jamie Dimon has been pretty critical of crypto. But I think I don't know him personally, but I think he's probably made a business decision. And also, he has shareholders to report to. And I think they decided as an institution it was time to, create a bridge for their customers.
Yeah. David, Josh, the other side of the institutional conversation that I've been spending quite a bit of time on is really the crypto treasury discussion. When you look more and more at public companies that are holding crypto and treasury, when we begin to see, I sort of jokingly beat up on SPACs that are getting into the market, David, but now we've got BTC companies, we've got ETH companies, now we're seeing Sol companies. I guess, Josh, David, where does the line get drawn there? And it brings me back to what we mentioned a bit earlier. How many investors are looking at something like Strategy and saying, holy cow, Strategy owns billions of dollars in BTC, and I see BTC going through the roof. I should buy Strategy. David, Josh, is it a sound operational model? David doesn't want to answer that. He wants you to go first.
Yeah, I feel like I go first a lot, but it's up to you, Josh.
I mean, I can say this. I think just like we say disclosure is important, diligence is important.
Yeah.
We're not going to know. We don't know without looking what someone's track record is. And even if they have a great track record, like what is their strategy here? Like what is their strategy? Do they have a strategy? I'm not saying this about this specific treasury, by the way. That's not what I'm getting at.
Little less strategy.
Yes, exactly. And so, yeah, I think this is critically important. What I've actually seen happen in certain instances is that people are saying, hey, there's this opportunity. It seems like a reputable team. I don't really have the time nor the resources to fully diligence this. I'm being asked to put forth some funds, and I think I'm going to do it. By the way, can you give me advice on, like at a last one thing, so I think just knowing that this sort of atmosphere is there and there is time pressure and there is, in some cases, competition, to kind of get on the board, so to speak. And just realizing that doesn't always yield the best results. I'm not saying anything about this particular offering, however.
Yeah. Josh, David, I often look at it from to me, there's really two stories here. There are the companies that are taking on crypto, BTC in particular, from what I'll broadly call future payments rails engagement, right, David? And I think there's some of it that is, we're going to ride the wave of BTC price appreciation or ETH or Sol. And that is the entirety of our business model. And that's the part, David, that kind of concerns me a little bit, because when you look at the premium to holdings, some of these numbers are ridiculously high from a valuation perspective. We're talking about over-the-counter companies that were worth, a couple of million one day and they're worth a couple of billion a week later. Those to me are a little bit weird.
So I'm going to put it in two buckets. I think MicroStrategy, they are, the leader. Michael Saylor is really innovative, and him and his team have come up with really innovative ways to raise capital and raise debt and buy more crypto. So I'm going to put them on one side, and if that's something people want to invest in, again, we don't give investment advice, but I'm putting that in a separate bucket. Yeah. For these other treasury companies, I think they're extremely hard to value. I think the stocks basically go public and then they sell off significantly because, people who have been in the company and don't have restrictions are going to sell right away. And then, you're buying something, like if you're buying a company that all it does is hold a certain crypto, like how is that company, the company's going to have to operate, it's going to have to pay salaries, it's going to have to do its regulatory filings. How does that company somehow become worth more than the crypto it actually holds? So I think the treasury companies that are interesting are ones that stake, are ones that run validators, are ones that do something else besides just hold the crypto as their sole purpose. So I think that's one big distinction. And then I want to make one other distinction that, look, a company like Coinbase is buying more Bitcoin for its balance sheet. I think that's great. And so them having a position in it, and they've obviously run their whole business and they see appreciation from it, I think that's great. But I think it's really hard for a company that is just holding a specific crypto. I think it's hard. How does the NAV become worth more than the share price?
Yeah. David, Josh, good points. And again, I think I always end this conversation off. We have so many colleagues in different industry segments, David and Josh, that often asks, well, what do you think of XYZ company that just went reverse acquisition and now is worth $2 billion? Like, just caveat emptor, please do your research. Josh, I want to pivot back to one thing that we haven't had an opportunity to talk about. We've got to get our litigator friends. Shout out to Kayvon Sadeghi and shout out to Jason Gottlieb and so many of the others. The handful of cases that are out there that are still in the news waiting to be resolved. And I'm not sure if you want to talk about some of those, but certainly I think we've got an appeals ruling deadline of August 15th in the Ripple case. I think there's a pretty notable, the Tornado Cash case that is now in front of the jury. In the past, Josh, these would have been big enough deals where the market would have been terrified and sold off. It almost feels like waiting for the resolution of these to let the market move forward. Josh, do you want to talk a little bit about that? What should we be looking for as we look at those cases?
So, admittedly, I have not been following as closely as I usually would have, just because so much has been happening in the market and with clients generally. But I agree with you, Ron. I think actually let me step back from that for one moment. I do think that with respect to certain items, for example, certain of what I feel very delicate in mentioning the specific things, but with some of what you said, I agree that it's sort of just the wheels of process, and we're just kind of riding out the former administration's work, right? On the other hand, with respect to the Tornado Cash question, I mean, I think that isn't something where my personal view, that we should just be waiting for it to pass. And I'm not saying that you were suggesting that at all.
No.
Because that really is it relates to a key question or key questions about free speech, all sorts of different sorts of liberties and related considerations. And also it's a person's future, right?
Yeah.
And we have the separate questions about sanctions and what can be sanctioned or not.
Sure.
We are, of course, faced with the delicate question of, if you can't fix something by some sort of OFAC or other sort of step, how do you deter people? But I do think that this case, and I believe it's Brian Klein, is he?
Yeah.
Counsel? Yeah. He's fantastic. And I think these, like I said, I think in particular that case is very important.
Yeah, and Josh, I certainly didn't mean to minimize the importance.
Oh, I know you didn't. Like, that's why I said I know that's not what you're.
Yeah, but those are important discussion points for my colleagues and friends on the technology side of these discussions. You'll often hear some of them say, "Look, coding shouldn't be a crime." That's a very important and nuanced conversation. It depends on what you do with it, and I'm certainly not a legal expert, but important things to look at. Josh, thanks for that. Shout out to Greg Murphy, our friend and WSBA member up in Toronto. Spoken to several companies in mining, biotech lately, wanting to hold BTC and Treasury to boost their stock price and valuation. Yes, my point exactly, Greg said much more eloquently than I could, a little bit frightening on my end. David, Josh, I mean, there's still a lot to cover. I know there are things we're looking at in the marketplace as well. I do want to do a shout out to so many of our colleagues that will be joining David Brill and Josh Klayman and I on October 23rd in New York City for the WSBA's Crypto and Blockchain Summit live and in 3D. You'll get to see David and Josh in person. The links are now available for public tickets. There'll be CLE, there'll be cocktails. David, you're out of luck on the shrimp cocktail, I think, this year, buddy. Sorry. But for those of you who are interested, please register. Happy to have you join us or email us info@wsba.co. We've got a lot of stuff still to cover, and it's been a busy news week. Josh, David, we're going to make it a little bit of a tight 45 today. David, what are you looking forward to going forward in the market? And you and I have not spoken about the VIX. I almost texted you the other day about the VIX at a 14 handle, but I'd love to hear what you're going to be focusing on in the coming days.
I want to make one more comment, actually, because I really think that this Roman Storm case and the whole AML OFAC regime, I think it needs to be a little bit reimagined with crypto. And one thing I was heartened by in the White House report that they found that the prevalence of money laundering and terrorist financing via digital assets, is well below that of the same activities using fiat currency, bank, and traditional money services fund transfers. So I think it is nice to hear that there's some, validation of that fact. But I do think that there needs to be some reimagining. I mean, the $10,000 threshold, I think inflation adjusted would be more than 50,000 for transactions. And I really think as the technology grows that there does need to be some reimagining of this, because I can tell you, having worked for exchanges and regulated entities, reporting transactions at a $10,000 level, there is so much data being reported to the government and shared that you can get lost in that data. And so I think a higher threshold is important, and I think there needs to be some reimagining of all of this. So
yeah,
that's
and
something
David,
that I think about.
Yeah, and I would argue that a lot of the firms in this space probably couldn't easily handle the deluge of data they'd have to process. And we've had this conversation with so many of our colleagues. Josh, what about you? It's not, you're always busy, but would love to hear what you're going to be focusing on in the coming week.
Well, I think one thing I would just note, and I think everyone realizes this, but just because we see announcements by banks, it doesn't mean they just suddenly did it. So, there's a lot of stuff underway that, many of us, including probably you guys, are aware of, or we're working on, or planning. But I would just say that once everyone knows this, once you've seen the announcement, it's, it's out. It's like you launch open source, into the world. But there's a lot that leads up to that. So,
David, did Josh just tell us to not believe the hype?
I think what Josh is saying, and I think that we've experienced this, is there's a lot of work that goes on behind the scenes before a company is willing to step out of the shadows and make that announcement. And so I think we've been in a really interesting space, because on one hand, we've seen the wind up a lot of the enforcement actions, and we're just seeing a few legacy cases left. And then on the other hand, there was this waiting period where people were waiting to get, the Genius Act signed, so that there was this clarity and there was this ability to move forward. So I think there's been the crypto markets have been really busy, but I think, behind the scenes, there's been sort of a realigning, and things, have been a little quieter. But I think now that we have, regulation moving forward, and, we have an engaged SEC, I think you're going to just see a ramp up of work in the space, and sort of this movement from a lot of, adversarial enforcement actions and litigation to more now building. And I think that's kind of what I'm focusing on. And, I'll be reading the president's report again, and some of the speeches that were made, because it's hard to do your day job and then read everything, after hours.
David, Josh, thanks so much. I will likewise be over a nice bottle of Bordeaux that we found, reading the presidential report. I'll also be deep diving and highlighting Chairman Atkins' speech. I do want to make a shout out to a bunch of people. I want to shout out, obviously, Josh Klayman. Shout out to Emma Channing and Kirsten over at Spencer Fain, Adam Goldberg. Shout out to Gage Salicki, Patrick, who had just joined, and I can't believe I forgot his surname, working, Josh, on our response to the Senate RFI. I'll be reviewing that. I'll be reviewing a red line document this weekend, Josh, which all three of us know is really a lot of fun. We'll leave it there. Dr. James would love to join the WSBA working group meeting in Southern California. Dr. James, drop us a note, info@wsba.co. Happy to reach out and have you join what we're doing. There's even more going on. Thank you to all of our members. If we missed anything you wanted David or Josh or I to respond to, again, email us info@wsba.co. Have a great weekend, everyone. The heat wave's over, and now it's just cloudy in New Jersey. We'll talk to you again next week. Take care, everyone. Bye.
Bye.